Hello everyone, this is Victor Riesco with a new market update for July 28th, 2025. So, the trends, what are the trends telling us? Well, all trend signals, short-term and long-term remain bullish in basically all major asset classes. Um, and they've done so for quite a while. The only maybe like pseudo red flag right now is gold, which might turn into a short-term downtrend today. This is pre-market, and we see that if we close at these levels, my short-term trend signal will turn negative. But overall, if you look at the long-term trend of gold, it looks really positive. And if you look at the weekly chart, it looks like we're just consolidating here, and we might, we're just taking a pause before the next move higher. It kind of looks similar like this consolidation here or here or here. So we'll see how this plays out. But at the moment, it just looks like a pause. For short-term trading, maybe this is not the place right now you want to get long. But overall, the technical picture remains bullish in gold. And basically the same can be said about everything else in the S&P 500, Nasdaq, Russell, Bitcoin, high yield debt. So nothing really much to discuss here. This looks bullish. Market breadth. Also, we've seen some short-term oscillation as of late, a bit to the downside. But after last week, we're back to short-term breadth, short-term breadth back to positive, and well, basically bears. Well, let's take a look at that chart. And here's my short-term breadth oscillator. So basically, when it's above 35, we're in a bullish environment, and if we look at chart of the S&P 500, so here we see that basically when we dip below this level, it basically means that there's some short-term weakness in breadth, and it might amount to some bigger pullback or weakness in the market. But so far, after the April bottom, every chance the bears have tried to put the market down. We quickly get buyers here around the 21 exponential moving average, and higher we go. And we saw this here. We saw right here. This is when all the Iran conflict was occurring, and also we got a couple of bearish days, and up we go again, back to positive. We actually reached short-term overbought conditions. We chopped around for a bit. We actually dipped to negative territory here, only for a couple days, and then back to positive and new highs. So basically, bears have every chance they've had to maybe control the price action, at least short term. They failed, and that's the pattern that's occurring. And other than that, all the other breadth measures are in solid bullish territory, and it suggests that the market mid to long term should keep on going higher. Right now, that's the message we're getting from the technicals. And if we go to the sector ranking and see which sectors are leading or behaving the best, it's basically a super risk on picture with leading sectors being the most aggressive ones, and also very broad participation with a lot of sectors acting bullishly. Right now, we have 29 out of the 33 sectors that I track that are in a long-term uptrend, 32 in a short-term uptrend, and which ones are outperforming the consumer staples, which are the defensive sector. It's basically all of them except for healthcare, and so healthcare and biotechs. So overall a very bullish picture, and suggests that the market can continue moving higher, at least in the mid to long term. Back in March, April, February, we saw this picture very different. There was a lot more sectors, sorry, that were actually not in a short-term uptrend, and actually a lot of them were losing their long-term trend to bearish, and very few sectors were actually outperforming staples, and the leading sectors were actually not leading, the most aggressive ones, but actually a lot of defensive sectors were starting to outperform. So right now, this looks completely different as we saw earlier in the year. And we see industrials, technology, high beta, Nasdaq 100, emerging markets, growth, semiconductors, innovation, communications, Back 7. Um, there's aggressive sectors leading, and if we see the weekly performance, most sectors had a really good performance, and actually some, even some laggards like materials and home builders and low volatility and healthcare actually had a really strong performance last week. So all the only semiconductors and ARC innovation, which have been leading, had a very soft pause, you could say. But other than that, most sectors were up, and actually the average gain of all these sectors was 1.3%. So super bullish. Breadth, there's a lot of sectors are moving higher. So even though the market has climbed a lot in a short-term period of time, that makes people nervous. Really, I can't say there's like something really bearish, to be concerned with, and that that this might be the top, and we're entering, a really harsh correction or maybe a bear market. Is right now in the technicals, like there's nothing that suggests that. So what has been driving this move higher? I think with all the sell-off we had earlier this year, there's been a lot of earning surprises and upward revisions when the results became much better than expected in these Q2 earnings, and also companies are guiding higher, and also the economic data has been stronger than expected. There was a moment that 70%, there was in poly market that 70% odds of a recession occurring, and now I think it's down like to 20 something. Here we see another chart basically showing the same, how revisions have been moving higher in the Nasdaq, the S&P 500, and the ratio of revisions of the 1 week change versus the 13-week trend, and we see that analysts are revising their EPS of stocks higher, and that's what's basically this rally is being supported fundamentally. It's not just the momentum; it's just fundamental analysts revising their targets and seeing that earnings are going to be better than expected, that the economy is going to be better than expected, and that drives the stock prices higher. Also, sentiment right now is also very far from extreme bullishness. This is the AA bull ratio. Now, of course, we've climbed from the bottom here in April. We were really bearish, but we're still far from these extremes in bullish sentiment that we saw earlier this year and last year or 2023, and which also that doesn't mean that the market will top if we get up here. Here we had like very bullish sentiment. Maybe we had a dip for a little while, a correction, but then the market moved higher. And right now we haven't even reached those bullish extremes. So sentiment is also not really showing us that there's nothing really to be concerned as extreme bullishness. Actually, there's a lot of doubt in this rally, this wall of worry, and that's what sentiment is showing us. Okay, but we know now that we got that clear that the technicals are bullish, the trends are bullish, breadth is bullish, fundamentally the market is being supported. Let's see where the market could go. And if we just look at seasonality, we're actually entering a weak patch in the market. This is the seasonality of the S&P 500 the last 30 years, and August and September are the weakest months. And we see here the average of how the market behaves is bearish. So let's see what happens in the next few weeks. We have a lot of important earnings being released this week, such as Apple, Spotify, PayPal, Visa, a lot of big companies. And also we've got a lot of macro data being released. We have FOMC. We've got employment numbers coming out, core PCE, ISM manufacturing. So there's a lot of data here. So let's see. Also, there's trade deals going on. The news are that the U.S. reached a trade deal with the EU. So it'll be important to see how the market behaves with after moving really really strongly higher the last few months. We'll see with all these bullish news that are occurring, and if the data comes out positive, or the earnings become releases are positive, it's important to see how the market will react. If we get not a muted response, um, even some selling, we might have reached a short-term top, sort of exhaustion, and which kind of coincides with seasonality. So I'll be in the lookout for that this week. But even if we pull back a bit, August, in September, you know, if we unless we get a major technical breakdown, and we see all this behavior I was showing you before of leading sectors, really really change, and they start to sell off and break down, I'll look at this as a buying opportunity. That's my focus right now. Um, Also, seasonality, consumer staples, healthcare, and utilities, which are defensive sectors, tend to do well in this period. It kind of makes sense, they're the defensive sectors, and if the market tends to be weak, we'll see that money tends to go to these sectors in this period. So that's something for you to be in the lookout. If these sectors start showing some bullish setups and the market looks weak, it can be an area to focus and make some profits while the rest of the market takes a pause. And actually, this was what happened during the April sell-off. March, these sectors actually perform pretty good. So we'll see if that happens. Just seasonality has the giving them a tailwind, and let's see what's going on the next few weeks. But just for I'm just giving you this information to be aware of. And that's how it is. Stock setups. Right now there's there's a few that interest me, but it's kind of hard right now because there's a lot of stocks that might be setting up, but they have earnings release now in early August. So I personally don't like to trade stocks that are going to release earnings soon, because you can get really hurt if they have a big miss. Semiconductors taking a pause. It's looking here that it held its 21 exponential moving average, and it's trying to move higher today. Here you might have a good chance to enter this leading sector with a tight risk reward. But as of late, I've seen a couple of mean reversion setups, which I haven't really talked about in a long time, since the market's been going basically straight up. So there's not really mean reversion setups occurring. But right now, there's one in Netflix that you can still enter. This is the mean reversion signal here. And in Netflix, these signals in the last 3 years have had 100% win ratio in the next 15 days. The market moves higher, rallies in the next 15 days. You can see the signals here. The last 3 years, it's been a really good setup. You see, so that's one stock I'm looking for a mean reversion setup. And the other one, it's PM, Philip Morris. This is a stock I traded a bit during that bearish phase the market had. After the February highs, you see Philip Morris did really well, and now it's sold off. It's down from its highs around 14%, which is not common for this stock. When it's in a bullish trend, when it sells off, it doesn't sell off more than 10%, and now it's sold off on around 15% in just a few weeks. It disappointed with earnings. There were good earnings, but the market had a higher expectation. But right now, it's triggering a short-term oversold signal. I'll be in the lookout for this one in the next few sessions. If we trigger a bullish, mean reversion signal, maybe you have the 200-day moving average as possible support. So that's another stock I'll be watching these next few sessions. So that's it. Hope you have a good training, and comments, questions are appreciated. So I hope to hear from you. Goodbye.